Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
We're still in pursuit of the only champion on the only league that matters on television. You're watching the most merciless stock-picking show on television. I'm Bruce Whitfield. You are watching Share Shootout League. Now, how can Eskom senior executives forego a bonus they didn't even deserve? How long can the rand continue to slide, and just how long is a piece of string? Now, we don't know the answers to any of these bogus questions. What we do have, though, is the Share Shootout League. It's hotting up, and as you can see on the activity from Twitter from last week's match, we can see how Gary, whose running dog, begged, cheated, pleaded, and then retweeted from false accounts to come out on top of Matthew, of course, Shy-Town. Most importantly, he is now the leader of the new pack. This is what the leaderboard looks like. There's Gary. He's running dog with 6 points. Syd Maverick is on 3. Lots of guys on 3 points, but Gary is the running dog to beat. It's all up to you, really. Your Twitter votes have got the power to change this leaderboard and really make somebody terribly famous. So what you have to do is go onto Twitter and follow the hashtag at SSO League, of course, and you've also got to vote for one of our stock pickers, but only the hashtags count. This is not deja vu. I repeat, this is not deja vu. I repeat, this is not deja vu. This is the week in which the contest hots up. It's a league with our runaway groom and the man who refuses to retire. Let us check out this evening's players.
My name's Gary Booysen, Head of Trading with Vunani Private Clients. At the moment I'm experimenting with enhanced alpha trading. You almost go and find value, good quality companies, and then pick them up, hold them for the long term. As long as it's got solid fundamentals, you put hedges in place to try and get that little bit of enhanced performance. So it's a philosophy, new philosophy, but we're trying it out. So it's going to be interesting. I think lots of prep work. I mean, it's a very tough show because you never know what the other contestants are going to do. But we're going to have to really go and dig out some good opportunities for the viewers. And yeah, I think also throw in a few curveballs. Try and find something, some of the more obscure stocks that are showing value. So far, my biggest competition has probably been Mike Harworth and Sasha. They've always been tough to beat. I think I have a shot at it. I think maybe the track record has been fair so far, but it's definitely going to be tough. I just hope the audience is going to base their decisions on the quality and the performance of the shares, not just on the explanations.
Syd Vianelle. I'm an independent investment analyst and investment advisor. I like looking at themes. I devise themes to suit the particular investment climate, and I try investing in companies which fit into whatever theme I believe is appropriate for the business cycle at any one particular time. At this point, I don't have a game plan. This is the first time I'm in the competition, and I would say I would probably end up devising a game plan as we move along and as I get a feel of how things are developing. At this stage, I would simply say Sasha, simply because he's the longest serving member on the team, and he is a very experienced and very successful investment advisor in his own right. I wouldn't have entered if I didn't think I had a good or a reasonable chance of winning it. At the end of the day, it is a game and we're all here to have fun, but deep down, we all want to win it as well.
Well, the leader position isn't really at stake, but will Gary be joined by Syd Vianelle, or will Gary extend the lead that he already have? Well, let's get this party started. Both of these oaks have pre-picked 3 shares. Neither oak knows what the other oak holds, and each oak must accept at least one of the other oak's stock picks. Each oak has got 30 seconds to argue their stock pick. I have had enough of these oaks. I tell you what, Syd Vianelle, you are the chaser in this particular game. Gary is the running dog. Would you like to go first, or would you like the running dog to set off from the starting blocks and possibly fall on his face?
I'm totally indifferent.
I know you really need to make a choice at this point.
Good, I'll go first.
You'll go first. Okay, Syd Vianelle, which helps because you're in my first order. I'm fascinated by your first stock pick this evening. It's a 24 billion rand market cap company. It used to be bigger before the retail sector fell very, very sharply. You understand the retail sector better than most people in South Africa. You've seen interest rate cycles come and go over the years. Therefore, I'm fascinated to hear why in 30 seconds you're going to tell us about the Foschini Group.
Very simple. Foschini has just sold RCS. They're about to collect a huge amount of money next month. After that, they are effectively debt-free. Secondly, in their results that came out 2 weeks ago, they've shown you the extent to which they're able to grow cash sales. In other words, reduce the reliance on the credit business. Many of their brands, the sports brands at home, for instance, are not credit-related brands. They're cash brands. And I see the future of that company going forward with less reliance on credit.
There we go. There we go. Your time is up. Interesting pick, because we've seen the success, haven't we, Gary Booysen, of Mr. Price, mostly cash. The credit retailers have come in for an absolute bludgeoning over the last couple of months. What do you think of the Foschini group?
I think, out of the credit retailers, we do prefer Foschini over someone like Truworths. But, I'm interested to hear Syd's take on the interest rate cycle at the moment, which I think is inevitably what's going to determine retailers' future, share prices at least.
What is that take, Syd?
Look, we know we're in a rising interest rate cycle, but bear in mind the way the formula works in a rising interest rate cycle. On the assumption that bad debts have already got to a point where they are virtually peaking, remember, you get 2.2 times any increase in the prime rate in terms of the yield that you can charge. And if you've got no cost against it, which Foschini doesn't have now, or if virtually no cost, that goes straight to the top line. So I'm saying that in this cycle, we're going to have this perverse situation where rising interest rates could in fact enhance the profitability of credit-based retailers on the assumption that the bad debts are reaching their peak.
Fair
and they've
enough.
already put in place the measures to control it.
But your proposition is that Foschini is going increasingly towards cash. Edcon, at its results last week, was talking about raising, giving more credit to its customers. Are we going cash or are we going credit? Make up your mind here.
In Edcon's case, they have to go credit because the core of their business is selling merchandise on credit to customers.
To Foschini, however, are we going because they're going more cash focused, or do we like it because of the credit cycle?
No, they're raising the cash component of the business, and they've got brands which you've got the World Cup coming up again. You've got the sports brands. You've got parts of that business which will thrive in a cash-only environment.
Shoot it down, Gary Booysen, because I think you
I am going to shoot it down. I don't like to shoot down a retail stock because I know this is his sector and this is where he's an expert. But for me, 100%, I take on board that they are getting defensive. They're reducing their cash exposure. But with the rate hiking cycle, I mean, you've now said that you expect this isn't a once-off rate hike. Just to settle in.
No, there are a few. I agree.
It's going to be a prolonged rate hiking cycle. If you overlay the retail sector versus rate hikes traditionally, first rate hike, you get a big sell-off, a recovery, which we've now had, and then a gradual drift lower in the sector. Like I said, Foschini not bad, but I think it's not just about the debt, it's also about the consumer now being under higher pressure because
we need to leave it there, but you are shooting it down. Okay, on that point. Okay, big mouth. Let's see how you go on education, because private education is a sweet hot sector. But in order to buy Curro, you've got to pay Capitekian multiples in the early days of Capitec.
Capitekian times 10.
Yeah, there we go. Capitekian multiples, the sort of multiples you had to pay for Capitec in the early days, and boy, you've been rewarded. Is this a bet on Curro, or is it a bet on the Capitec style increases that you could very well see in the share? In 30 seconds for Curro.
I think it's a bet on both. We first talked about Curro when it was 10 rand, and we said, there's no earnings, and now suddenly they are, they're turning a profit, and the growth path is still in place. I mean, they've just had a rights issue and went very successfully, ramping up schools dramatically. I literally can't update models quick enough to keep pace with their growth. I mean, I think they're on 31 schools now, so 27,000 learners. 2012, they're looking at sort of 80 schools and plus 50,000 learners. So I think a huge growth story, but the story also coming from just the lack of service delivery by the government.
The alarm bells ring when you say, I cannot update my models fast enough to keep up with this business. They are building 10 schools that they plan to launch in the new year. Are they not running the risk, Syd Vianelle, of running too fast for themselves?
My problem with Curro is that a large part of that share price, I think, is all to do with Jannie Botton's face and the people behind PSG. And when we get to the absolute basics, and we say to ourselves, at what rate can we grow the earnings to eventually, if ever, get to a PE that's decent? I'm not so sure about it.
That's the risk.
That's the risk. And as we sit here at the moment, I think, I remember we can go back 20 years when MultiChoice came on the market, and I was one of those who was skeptical. I'll be quite frank about it. I was skeptical, and I was wrong, because the thing eventually turned. You got that curve, and the moment the curve turns, it goes haywire.
And it goes to the fundamentals of South African society, and it goes to education. It goes to World Economic Forum reports, which talk about us being weak in maths and science.
At what price?
Parents want to buy that, and they will pay almost anything. They will go without new shoes to pay the fees.
If they've got money to pay the fees.
But that's the business model, isn't it? They've got two tiers of business model. They've got cheaper private schooling and elite private schooling, and maybe that's the secret.
Definitely right. I mean, if you look at a report by the Institute of Race Relations, there has been a mass exodus from public education into exactly, Curro, like you say, they are delivering private schools on the low end, specifically because there's a fundamental need here. On the actual earnings, whether they can keep pace, if you look at a study, private education sort of cost will grow at about, there's a 2% gap between that and sort of inflation. So, these schools also, remember, I mean, they've obviously got all their feeder schools, but these schools are still, the ones that they've built, half full. I mean, they're still looking at taking massive on-take, even without building schools. And I think that you will see the earnings.
And that's the point. And any private school that's good enough for Julius Malema's kid, it's got to be good enough for me.
But will the share price, will the earnings ever get to a level to justify the current share? We may have, and this is my fear, and this is what I actually expect is going to happen. We're going to have a 1998 to 2004 situation where certain shares like Bidvest and Imperial, their earnings went up every single year. You know what the share prices did for 6 years? Nothing.
Absolutely.
We could have a situation.
We could. And that's
where
the
Curro
point.
has reached this point where for the next 6 years, it doesn't pay a dividend. I'm actually going to get a zero return for the next 6 years.
Syd, I mean,
it's a great business.
Your point is so well made. Great business, great need, great market, great hunger, great desperation for great education. What price are you prepared to pay? Syd is not prepared to pay the price that you are prepared to pay. One of you will be right and the other will be wrong. Ultimately, kids will be better educated, so we're all winners. You're shooting it down, Syd.
I'm shooting it down. The only thing in its favour, I'll tell you what it is. I don't believe the share price will come down. There'll be enough support to keep it where it is.
It's not paying a dividend,
but I don't think it's going to go up.
But you're not getting a dividend yield from this thing either.
But you've got an underpin. You've got an underpin.
Okay.
I don't think you're going to lose any money.
We need to move on. Okay, so Syd Vianelle, your next pick is an interesting one. Brand new chief executive in place after possibly one of the most diabolical series of issues that affected Arcemorittal, not signing, of course, the new lease on the Sishen Iron Ore Company. It led to all sorts of governance issues. The chief executive, Nonkululeko Nyembezi-Haita, has moved on to chair the JSE and do other things. And the guy who used to be the financial director at Eskom, which is yet to complete building power stations on his watch, is now the chief executive of Arcemorittal. I'm interested to see in 30 seconds how you justify this one. Go.
Very, very simply, that the government's infrastructure spend is lagging behind. To the extent that there is going to be some spend, and there will be some spend, Mittal's obviously going to benefit from that. But more importantly, there's a spend that's going to take place in Mozambique with the gas fields, and you read about it in a well-known financial magazine last week. The spend is ginormous. A lot of that spend is going to require steel, South African steel. Obviously, a lot of it's going to be imported, those gas trains, a lot of that's imported stuff, but there's a lot of, if the infrastructure spend isn't here,
time is
there.
Up. Okay, but so infrastructure spend, if it's not here, it's there. The real risk here, Gary, is we don't have it here because, as Nhlanhla Nene warned us in Business Times 2 weeks ago, we headed for a ratings downgrade. It makes raising debt overseas, as African Bank is about to learn, considerably more expensive. And as a result, our infrastructure projects, as desperately as we need them, could be constrained. Can you be bullish on Arcemorittal?
It's a turnaround story, I think. You've got to believe in that. And for me, it's probably a little bit too early. I mean, you can raise all the points here. One, I take a point on infrastructure spend, but it hasn't come through. And I mean, you've now got declining GDP, and inevitably, a play on Arcemorittal specifically for the South African market. You've got to have growth in this, especially in construction sector, which I don't think you're going to get. Like you've mentioned already, electricity costs very, very high, very difficult. And I think what they also, they're stockpiling steel at the moment because they shut down Newcastle for a while for relining. So for me, it's a risky one. And I don't think you need to take that much risk to make money in this market.
You're shooting it down on that point. Yeah. We have to move on. So you've been shot down without chance of a rebuttal. Okay, Gary Booysen, big mouth. Let's see how you go to the other end of the steel value chain and justify, based on your criticism of Arcemorittal, Kumba Iron Ore. They all used to be part of Eskom at one time. It's all keeping it in the family. In 30 seconds, tell me why.
Kumba not as reliant on the South African story. Obviously reliant on its exports, reliant on overseas markets. I mean, I think you just have to look at the fundamental metrics. I mean, its cost per sort of ton of iron ore is about $26, and it's selling them at what, 94. This share is priced for a collapse in iron ore already. You got a little bit of wobbles out of China, and you see the share price re-rating. I think it's an opportunity to get in. I mean, you're paying what, 11% dividend yield. A historically low forward PE and PE. I mean, you're talking 10, 15.
But this is a demand story. This is a scary story. So this is anticipating that the Chinese will continue to consume iron ore at least a high percentage of the rate that they have been doing in the past.
Right now, I'm not sure I want to be in any iron ore share. Very simply, there's a glut and there's going to be an even bigger glut. The price has now got to $91, or it may have picked up a little bit since then. The cost impact of a weaker rand, because obviously, Kumba, it's a play on the price of the iron ore and the rand. The cost impacts of a weaker rand come through later. That's still got to come through. So,
and if the dividend was as certain as Gary would like to believe that it was, we'd be wearing super long boots, we'd be wearing waders, and we would have filled our waders
I'm not worried about the cost.
Okay.
The cost to me is immaterial because the cost was there last year as well. It's really the difference between the cost and the selling price. But that was in last year's earnings. But if the selling price was 110 and it's now 90, that entire $20 minus the agent's commission and the shipping cost comes off the top line.
30 cents for
the bottom line.
iron ore.
Yeah, but this is what I'm saying. Like, we all know, you look at any research report, we're expecting iron ore prices to fall probably sub 80 down to sort of $60 a ton, and that's exactly what Kumba's priced for. I mean, that's exactly they still.
So you've got a safety cushion there.
It's got a safety cushion, and it still has massive margins even at those prices.
Okay.
So for me, safe. Look at what the CEO of Rio is saying as well. Below $80 a ton, you've got a lot of other steel producers, I mean, at least iron ore producers going out of business, especially in China where they've got emissions problems already. All those small mines closing down.
We need to wrap it up. Sid, you're not buying the story.
Just remember, Mrs. Reinhardt's 50 million tons from whatever it's called, from Australia, from Hancock, is coming on stream in a year's time.
You're shooting it down.
I'm shooting it down.
Oh my goodness me. We go into the final stretch of the show.
We are both taking big gambles
the Running Dog and Maverick going head to head. There is absolutely no friendship made here, but certainly plenty of friendships potentially lost. And it's going to be up to you, of course, to decide who the winner will be. It's never too early or too late to take to Twitter. You follow at SSO League, and then you cast your vote. And then whatever prejudice you have, whatever judgment or whatever bias you may have against either Running Dog or Maverick, you then express it with passion and with venom on Twitter, and we'll take a 2-minute break while you register for Twitter so that we can come back. They can make their final arguments in the stock picking battle of the week so far, and we'll see whether or not Running Dog can extend his lead, whether Syd will play catch up. All of that coming up in just a moment. You're watching CNBC Africa. This is Share Shootout League, the only league that doesn't have goalposts. This is match day 9, and this is how the league looks currently. If we have a look at the video wall, boy, is it heating up. There is Gary Booysen, Running Dog, in the lead with 6 points. Maverick with 3. It's up to you, really, as to whether or not we see Syd moving up to where Gary is. And right at the bottom, who do we have? Oh, no, Levan, the good guy, and Neo, the one. Well, he calls himself the one. He should actually be called the 0 because he's got absolutely no points. You could change the whole look of the league by simply using either the hashtag, or you can vote for Maverick or Running Dog this evening, and we'll have a quick look at the stock picks as well. Okay, so Gary Booysen, your stock picks have not been chosen this evening. From Curro to Kumba Iron Ore, 2 lovely companies, 2 great stories. He thinks they're lousy stocks. And then, as far as you're concerned, Syd Vianelle, from who's the independent analyst, of course, Foschini, he was reluctant to shoot down your Foschini pick because he knows you know how to fold a T-shirt. But he shot it down anyway. Arcemorittal, he thinks you're joking. So we go into the final stretch. I'm going to let you keep your final stock pick on ice for just a moment. I'm thinking Gary's really going to regret not picking Foschini because the last one is challenging. Right, to you, Gary Booysen from Vunani Private Clients. I'm fascinated that you're using your offshore allowance this evening because that's what you're allowed to do. It's a $145 billion Mickey Mouse company. In 30 seconds, tell me why you like Disney.
Yeah, my other two picks have been quite speculative, quite high risk. This is the blue chip of blue chip companies. I mean, it's it's been around for 100 years or just under 100 years. It goes through recessions without even batting an eyelid. Bob Iger now taking over is really, I think, it's turned a little bit of corporate politics, in the last decade. But now things really turned around, and they've bought out Star Wars franchise. They've got the Marvel franchise as well, and I think both of those are really going to take it forward in the years to come. I mean, they just need blockbuster after blockbuster, and I think mass media. If you're going to buy mass media, buy America.
There we go. So is it a Mickey Mouse pick? Is he completely goofy? Are you going to Donald Duck? That wasn't bad, was it, spontaneously? And you see where
I've done well tonight.
You see the era
waiting to the end.
You see the era where I grew up. I don't know any of the 21st century characters, but yeah. So Disney, it's a fantastic business. They continue to reinvent. They're producing good stuff for kids of today. You got to love it.
I did own the share once. I sold it at a profit.
At what level did you sell it?
A lot lower than the current
60,
price.
50,
I wanted to
40.
buy it back, and the fact that I haven't bought it back doesn't mean that I don't like the stock.
Yeah.
It's actually a great business. What's impressed me about it is the theme park business and the profitability and the consistency of the profitability of the theme park business.
Haven't you been to the theme parks fairly recently? I thought you had.
We went 3 years ago.
Yeah, that's very recent.
And we went many years ago as well.
But you get to see the process.
I know what it's all about, and I know it was over New Year, but I also know how full those places get. And this was December, but I'm told in June, July, due to the American holiday season, you've got absolutely no hope of getting in, with a motor car or anything like that.
So I think he likes it, Gary.
The risk, the only risk in the business is movies is a risky business. What you think is a great movie that costs you $200 million to produce could actually flop on the second day or the second week. It's a risky business, but you've got the theme park business, which to me has always been the most impressive part of that operation.
And there's merchandising, and you only have to have.
You've got all the other things that go with it.
If you have three out of four hits, if 3 out of every 4 movies you ever make are hits, then there's merchandising attached, and everybody wants the Mini Pocahontas and the Cars franchise, all of that sort of stuff. Everybody from Tomato to Lightning McQueen. I'm showing I do know. So you like it? You'll take it.
I like it, Tyler. And every time I've been there, I go and stand there in front of Mr. Walt Disney at the entrance to the Florida theme park.
Pay homage.
And I pay homage to that. I do.
There we go. Which makes your final pick really interesting, because we're going all the way from Orlando, Florida, to Bloemfontein for your final pick. There's only one company on the JSE that comes from Bloemfontein, Gary Booysen, that is? Raubex, absolutely right. In 30 seconds, tell me why you like Raubex.
Very simple. Raubex is not a construction company. The core business is asphalt. Now, if the infrastructure program is going to be held back because there's no government money, they will flip the business to fixing up and maintaining the existing roads. In other words, if you're not going to build new roads, you certainly got to maintain your existing roads. They've gone deeper into the asphalt business. They are the biggest players. They bought something last year to entrench their position and to guarantee a source of product. The margins in that business are excellent. And
okay,
on the sideline,
leave it. The trouble is, does Raubex get the road repair jobs? I mean, certainly not the pothole filling jobs, and that's the biggest job in the country, I would suspect, Gary Booysen. Is it one that you can tentatively like if you were forced to, as you are right now?
Yeah, I can tentatively like it if I was forced to. I don't particularly like. I hear what you're saying. It's not a construction company, but I think it's subject to the same pressures, subject to the infrastructure spend, which I don't have massive hope is going to come through. But I do accept it because it's same as Curro. I think there's a fundamental need for infrastructure upgrade in South Africa, and Raubex, I think it will take advantage of that. I mean, you said that the margins in this business are excellent. Can you just expand on that?
Well, those margins are close to 15%.
15.
Yeah, not 3%.
Like my Kumba.
Not.
What are my margins?
Yeah, no. But
wrap up, Syd. Wrap up. Justify, and then we'll shoot. Then you'll have to accept it.
You've got the asphalt side.
Yep.
But on top of that, you've got a careful exposure into non-South African business. Right now, they're busy. They made money in Namibia up to now. They finished off a contract. They actually made money and they got paid. Unlike a few other people.
No, absolutely. We've seen the Group 5s and the likes lose lots of money in the African continent.
Now they're into Zambia, carefully chosen contracts, which are more profitable in terms of margin than the South African business. So you've got a bit of construction. You've actually got some construction, yeah, but it's tiny.
We need to stop. You have to accept it. You wish you'd taken Foschini, don't you?
I don't like any of them, sorry. I really don't.
But if you had, you're forced to choose one of them.
In retrospect, Yeah, probably Foschini.
There we go. It's going to be a tough call for you this evening. Syd Vianelle has managed to get one over Gary Booysen, and that is unusual. We are tallying up the votes until midnight on Sunday. These guys are in need of your votes. So you go onto Twitter, you follow at SSO League, and you use their hashtags. Either you use the hashtag running dog or you use the hashtag Maverick, and one of these two gentlemen will move up the rankings. Would it be running dog Gary Booysen going from 6 to 9 points, or would it be Syd Vianelle joining Gary Booysen on 6? We'll be back with another Super Tuesday for Match Day 10 next week right here on CNBC Africa. Vote away. We look forward to seeing the tallies that come through. It's a long way before we crown the final winner of the most ruthless stock picking show on TV. It's a whole bunch of fun. Tell your friends, tell your family, make everybody watch, and most importantly, get them to vote. Follow at SSO League, and until next time, stay cunning. Good night.